Welcome back to Sip and Talk. You know, it feels like the international news is just constantly getting a massive software update in real time. You think you're finally caught up, and then bang, the whole system reboots with like completely new data.
Oh, absolutely. It's relentless. We thought we had things lined up for next week's deep dive, but the U.S.-China situation, well, it just jumped the queue. This latest system update, as you put it, is pretty major. Kind of a mixed bag. Really some relief, but also quite a bit of confusion.
Totally agree. So today on Sip and Talk, we're diving into all the fresh developments. We've got negotiation readouts, market reactions, policy forecasts. Our goal here is to unpack that trade deal framework they hammered out just before the Trump and Xi meeting over in Korea. We need to figure out what it really means for, Asian markets, global supply chains, and whether these underlying problems are actually fixed.
Okay, let's get into it. I mean, the first thing you saw was the market reaction, right? That tells you something. It signals a pretty big win for short-term stability. And this framework, it wasn't actually decided at the Big Leader Summit. It came out of those really intense talks in Malaysia, 2 days. Scott Bessent from Treasury and Vice Premier He Lifeng.
Right. They were basically setting the stage, clearing the easy stuff so Trump and Xi could have a smoother meeting.
Exactly. Laying the groundwork with the low-hanging fruit.
And the markets loved it. Risk assets just rallied. Asian stocks, U.S. futures, everything jumped on that optimism, a thaw. But really the biggest immediate win, that was probably for the Chinese side, wasn't it? Stopping that major escalation.
Precisely. The huge threat that got taken effectively off the table was Trump's warning, that additional 100% tariffs threat. That was supposed to hit November 1st. So avoiding that was crucial.
Yeah, that 100% threat was massive leverage. Even Secretary Bessent kind of admitted it, right? Said it was a necessary tactic for the negotiations. It felt pretty aggressive at the time, but I guess it got them talking quickly.
Well, yeah, and what's really interesting is how the Chinese statement described the talks. They called them constructive, which is standard diplomatic speak, but they were super vague on the actual details. Instead, they focused a lot on the process.
Oh, I saw that. They kept mentioning equality and mutual respect. But hang on, doesn't saying that almost like push back against the idea that the U.S. forced them into anything?
It does, and that's the clever part, politically. That specific wording is really for their audience back home. They absolutely need to show people in China that they weren't, bullied or pushed around by the U.S. It's as much about domestic politics as it is about trade deals.
Okay, that makes sense. So let's dig into the actual trade-offs then, the concessions. Starting with, well, the big one for U.S. politics, agriculture.
Right, concession number one. China's expected to restart substantial purchases of U.S. soybeans, other farm goods too. That's a huge political plus for President Trump. It speaks directly to his agricultural base at a pretty important time for him.
And we saw that first order go through already, 12,600 tons of soybeans. But, analysts are always a bit cautious about these promises long term. Haven't we seen deals like this kind of fizzle out before?
Oh, definitely. You have to be skeptical. Remember, the 2020 agreement, the buying was strong initially, then it just dropped off quite sharply. It really needs constant watching to make sure they follow through. And Chinese state media is already spinning it differently.
How so?
They're saying, this isn't political, it's just smart business. They claim Brazilian soybean prices shot up like 80%, so buying U.S. soybeans was just the economically sensible thing to do. A necessary price step, not a favor.
Huh. Okay, so framing it as just being good shoppers, not caving to U.S. pressure. Very clever. All right, moving on to the tech side. What about the rare earths threat? That seemed pretty serious.
Yeah, that's a big relief, at least for now. China's apparently agreed to delay for a year, putting those global export controls on rare earth minerals into effect.
A year. Okay, not forever, but it definitely buys some time. Why is delaying that specific thing so crucial right now?
It just removes this massive cloud of uncertainty hanging over manufacturers everywhere. Rare earths they're in everything. Microchips, EV batteries, car parts. So this delay, even if it's just temporary, stops that tech battle from blowing up into a full-on resource war, at least for a little while.
Got it. And the third big piece wasn't even economic, but really important for the U.S. domestically. Fentanyl.
Yeah, absolutely critical. Cooperating on the fentanyl crisis was a core U.S. demand. The numbers are staggering. Over 100,000 deaths attributed to it in 2025 in the U.S. alone. So China agreed to actually discuss cooperating on the precursor chemicals and maybe even easing some tariffs related to fentanyl products.
Yeah, it feels like a pretty big shift. My read was that China used to see any U.S. requests on fentanyl as, like, meddling in their internal stuff.
They absolutely did. The U.S. would ask for things like using state media, the People's Daily for anti-fentanyl campaigns, and China would just shut it down. Interference in party affairs, they called it. So the fact they're now willing to talk specifics, precursor chemicals, tariffs, it shows how badly they wanted that 100% tariff threat gone. It's a major concession, even if maybe long overdue.
But the U.S. isn't just taking their word for it, right?
Right.
They want to see action before they ease up on tariffs.
For sure. The U.S. side is being very cautious. They're basically saying, show us 6 months of real commitment, real results, then we'll talk about reducing those 20% fentanyl-related tariffs. It's very much performance-based.
Okay. Speaking of performance, Trump's Asia trip wasn't only about China. There was a lot happening with other countries trying to shift supply chains, right? Especially in Southeast Asia.
Right. While he was in Malaysia, he finalized some trade pacts or frameworks with several Asian countries. Vietnam, Thailand, Cambodia, Malaysia itself. The U.S. goal is pretty clear. Diversify supply chains, get less reliant on China, secure critical minerals, and open markets for U.S. agriculture.
And Malaysia specifically, what did they get out of it?
They signed a critical minerals pact with the U.S. It looks like Malaysia is trying to position itself as a new big player in refining rare earths. And interestingly, they're welcoming investment from basically everyone, U.S., China, Japan, Korea, to build up that capacity.
Huh, that's smart. Play all sides, get maximum investment, and build their own resilience instead of just picking the side.
That seems to be the strategy for a lot of countries in the region now, which brings us neatly to South Korea. Talk about being stuck in a tough spot. Their president literally described them as being situated between two grinding stones, the U.S. bloc and the China bloc. A challenge, but maybe an opportunity too.
Yeah, but their own trade talks with the U.S., the Chorus deal updates, they sound like they're kind of hitting a wall.
Yeah, stuck on all of the major details was the phrase I saw. It's not the big picture, it's the nitty-gritty of how U.S. investment into Korea would actually work. Things like, how does the U.S. invest? How much? Over what timeline? And crucially, how do you split potential losses or profits from that U.S. investment fund?
So it's down to the fine print on risk and control.
Pretty much.
Right.
The Korean president basically said they need a deal that works for Korea's specific situation. They can't just copy-paste whatever Japan agreed to, given their unique geopolitical pressures.
And then there was that whole other layer of friction. The stuff happening in the U.S., like visa problems for Korean workers coming over for the factories they're building, and that immigration raid in Georgia.
Oh yeah, that raid in Georgia apparently caused quite a stir back in Seoul. Korean companies are pouring billions into the U.S., creating jobs, and then their specialized workers face visa hurdles, or worse, raids. The Korean president's point is, hey, fixing this visa stuff is actually good for you, the U.S., because if our workers can't get here or feel unsafe, those big factory projects slow down. It's a weird situation where U.S. domestic policy might be tripping up the foreign investment at once.
Fascinating dynamic. Okay, shifting north to Japan. New Prime Minister Takaichi. Trump seems to like her, sees her as a strong successor to Abe, and she's not wasting any time.
No, she hit the ground running, immediately promised to front-load defense spending, hit that 2% of GDP target 2 years early. And on the economy, she's going big against inflation, fiscal stimulus, subsidies, tax cuts. Her finance minister even hinted more government debt is on the way to pay for it all.
Sounds like a very expansionary approach. But what about the elephant in the room? That super weak Japanese yen. That's got to be causing global ripples.
Oh, it's a huge issue. Japan's always faced accusations about its currency, and the weak yen keeps drawing heat from the U.S. But here's the interesting twist. Some think this U.S. pressure might actually give the Bank of Japan, the BOJ, the political cover it needs to finally raise interest rates.
Wait, how does U.S. complaining help the BOJ raise rates? Wouldn't Takaichi be against that if she wants growth?
Well, Takaichi might prefer low rates to boost spending. But if the U.S. is loudly complaining the yen is too weak, the BOJ can turn around and say, look, we have to act responsibly, stabilize things, respond to international concerns. It lets them tighten policy, potentially, without Takaichi having to own the decision domestically if it slows the economy down. It's like, political Aikido, a real balancing act.
That actually makes a lot of sense. Okay, so we've got this temporary U.S.-China truce, Korea walking a tightrope, Japan going big on fiscal policy. But underneath all this geopolitical noise, where's the actual money flowing? It seems like capital markets are almost ignoring the volatility and focusing somewhere else entirely.
You got it. The short-term ups and downs are distracting, sure, but the big money, it's laser-focused on AI infrastructure. Investors are making massive bets there.
And the scale of it is just wild, right? The numbers are huge.
Explosive is the word. Since 2022, investment in building data centers in the U.S. has blown past manufacturing and healthcare combined. Just think about that. All this cash is pouring into tech with, let's call it, high imagination, potential AI chips, semiconductors, cloud platforms.
But isn't that super risky? Those sectors are known for high leverage, big booms, and big busts.
They are risky, no doubt. But investors are tolerating it because the potential payoff is seen as astronomical. They're betting that the core infrastructure for the next big economic wave, all of the data centers powering AI, will end up being dominated by just a handful of massive players. If you can pick one of those future winners, the rewards could be immense, so the high leverage seems worth the gamble if you're right.
Okay, interesting. Before we wrap, just a quick glance at Argentina. Politics there having big global finance implications right now.
Yeah, the early results from their midterm election look pretty good for President Milei's party. Look like they got around 44% of the vote, picked up 64 seats in the lower house.
And why does that matter so much internationally?
Because this election is basically seen as a referendum on that huge $40 billion rescue package from the U.S. and IMF. That whole package depends on Milei being able to push through some really deep, tough economic reforms. The market seems to think these results give him the mandate to do that. Crypto assets in Argentina actually rallied pretty hard on the news.
Right, a sign the market thinks the reforms are more likely now. Okay, so pulling all these threads together, the main takeaway seems kind of complicated. We got to pause in the fight, but the fight's not over.
Exactly. This U.S.-China framework, built on soybeans, fentanyl cooperation, the rare earth delay, it's a really crucial short-term reprieve. It took that immediate threat of 100% tariffs off the board, which is huge. But the fundamental conflicts, tech decoupling, who owns IP, the race for critical minerals, none of that has gone away. It's still all there. This feels more like a short rest stop, not the end of the journey.
Okay, so that leads us to the final thought for you, our listeners. Given that this truce is probably temporary, does this bit of short-term certainty mean you can, shift your focus completely, maybe pour everything into those imaginative sectors like AI? Or does the fact that the big underlying conflicts are still simmering mean you've still got to keep a really close, maybe nervous eye on those trade war headlines?
That's the billion-dollar question, isn't it? Balancing the short-term calm with the long-term storm clouds, you really need the whole picture.
Absolutely. And as always here on Sip&Talk, we've tried to lay out the objective facts and different angles today, not pushing any particular policy or political view. We really hope you use this to sharpen your own thinking. If you want to keep getting these critical system updates, definitely subscribe to Sip&Talk. And hey, also check out our old friend Mickey's YouTube channel, Mickytolife. He's got fun memes, liquor tastings, and his latest vlog from Europe just dropped. Good stuff over there.
Yeah, check out Mickey.
All right, that's all for this update. We'll catch you next time.